The electrical trade built modern America. It wired the factories, the hospitals, the suburbs, and the skyscrapers. For most of the 20th century, an electrician in this country could expect a middle-class life, a pension, and work that would never run out. That world is collapsing right now. In 2023, the National Electrical Contractors Association reported a shortage of more than 72,000 electricians in the United States. That number is projected to grow. The industry needs to recruit and train roughly 7,000 new workers per year just to stay even. It is not coming close to hitting that target. This is not a story about automation or robots taking jobs. Electrical work cannot be automated. Every wire pulled through a wall, every panel installed in a new building, every circuit traced in a failing system requires human hands, human judgment, and years of skill. What is disappearing is not the work. What is disappearing is the pipeline that used to produce the workers. For most of the 20th century, union apprenticeship programs run through the International Brotherhood of Electrical Workers trained tens of thousands of electricians per decade. These programs were 5 years long. They combined classroom instruction with on-the-job training under journeymen who had spent their careers mastering the trade. The IBEW and the National Electrical Contractors Association ran a joint apprenticeship system that was, by most industry measures, one of the best workforce development pipelines in the American economy. In 1970, union membership among electricians in the United States was above 80%. Today, according to the Bureau of Labor Statistics, it sits below 25%. That collapse did not happen by accident. Starting in the late 1970s and accelerating through the 1980s, large national electrical contractors began a systematic campaign to break union labor. Companies like Fischbach and Moore, one of the largest electrical contractors in the country at the time, aggressively expanded their non-union workforces. By the mid-1980s, dozens of major commercial projects were being completed, with non-union crews who earned lower wages and received no apprenticeship training through the IBEW system. The trade did not die immediately. What died first was the training infrastructure. When non-union contractors won market share, they pulled workers from the union pipeline without contributing to it. They hired men and women who had trained in union apprenticeship programs, paid them slightly more in the short term, and stripped away the benefits in the long-term investment. The union programs lost funding, class sizes shrank. In some regions, IBEW locales that had trained hundreds of apprentices per cycle were down to a few dozen by the early 2000s. The Electrical Contracting Foundation published data in 2022 showing that the average age of a working electrician in the United States is now 41 years old. Nearly a third of the current workforce is expected to retire within the next decade. The industry has no clear answer for how it replaces them. The private equity firm, Quanta Services, is now the single largest electrical contractor in the United States. Quanta went public in 1998 and spent the following 2 decades acquiring regional electrical contractors across the country. By 2023, Quanta reported revenues of over $20 billion. The company operates through hundreds of subsidiaries, many of which still carry the names of the regional contractors they absorbed. What Quanta and companies like it brought to the electrical trade was the logic of financial consolidation. When you buy regional contractors and fold them into a national platform, your goal is margin. You standardize labor costs. You move work to lower-wage regions. You resist the kind of long-term apprenticeship investment that takes 5 years to produce a journeyman because the return does not show up on a quarterly earnings call. That calculus multiplied across the largest players in the industry is why the training pipeline is broken. The money was extracted. The investment was not made. The consequences are now visible on every major job site in the country. Project managers report scheduling delays caused not by materials shortages or permitting problems, but by the inability to find qualified journeyman electricians. General contractors are pulling workers off other projects to cover electrical phases on new construction. The Associated Builders and Contractors estimated in 2023 that the broader construction industry needs to attract more than 500,000 additional workers above normal hiring levels just to meet current demand. The infrastructure bill signed in 2021 committed more than $65 billion to electrical grid upgrades across the United States. The data center build-out, driven by artificial intelligence, is adding millions of square feet of high-voltage electrical work every year. Solar and wind installations require skilled low-voltage and interconnection work that only licensed electricians can legally perform. The work is there. The workers are not. What can be salvaged starts with the apprenticeship system itself. The IBEW Joint Apprenticeship and Training Committees still operate in most metropolitan areas, and their programs remain among the most rigorous in the skilled trades. If you are considering this career or steering someone toward it, the 5-year IBEW apprenticeship is the path. You earn while you learn. The starting wage in most IBEW locals is between $18 and $24 per hour, rising to journeyman scale, which in major markets now exceeds $45 to $55 per hour, plus benefits and pension contributions. The states that are moving fastest to address the shortage are investing in pre-apprenticeship programs at the high school level. California, Texas, and Florida have all expanded career and technical education and partnerships with electrical contractors in recent years. These programs are not replacements for full apprenticeships, but they produce candidates who can enter the trade with foundational knowledge and pass the aptitude tests that union programs require. For anyone hiring electrical work right now, this shortage has a direct cost to you. Labor rates for licensed electricians have risen between 20 and 35% in most metropolitan markets since 2020, according to construction cost data from RSMeans. That number is not coming down until the workforce expands. And the workforce will not expand until the training infrastructure is rebuilt. The skilled trades made this country functional. A generation of financial engineers decided that training workers was someone else's problem. Now, it is everyone's problem. The electricians who wired your neighborhood did not disappear because the work ran out. They disappeared because the system that produced them was dismantled piece by piece in the name of quarterly returns. The lights are still on, but the people who know how to keep them on are running out. Next, we look at the plumbing trade, where the same story is playing out and where one private equity roll-up quietly controls a majority of the training certification market. Subscribe now if you want to know who owns the gatekeepers before you hire someone to work in your home. The American electrician did not retire. The American electrician was defunded.